welcome back to the channel, your number one source for income-oriented investing. It's time to go over the entire income-oriented landscape on the U.S. stock market. So this is the U.S. stock market overview for us income investors. Before we do that, let's check out what the market has done in the last month. It's done really, really well. Here is the S&P 500, and just for reference, I am filming this while the stock market is still open on October the 8th. So S&P 500, perfect indicator for the overall stock market. Last month, up 5%, a very, very strong month. The NASDAQ 100 index, the NDX, up 7.33%, even better in the last month. And the Russell 2000 for the small caps, pretty much like the S&P 500, up about 5%. So the market's doing very, very well. Obviously, we're hitting fresh records or close to it. Of course, the crash and recession that was supposed to come every single year for the last 100 years anyway, as it hasn't come yet, but we're eagerly awaiting it so we could buy cheap shares, of course, right? We are long-term income investors. Like and subscribe. So let's go over the landscape, everyone. And of course, I'm going to be focusing a lot more on the diversified and especially index-based covered call ETFs, which just keep growing and growing and growing in this video. But I will also show you some more of the alternative niche stuff near the end of the video. So I'd like to thank the sponsor of this video series, sponsor of this video, and a good friend of the channel, Curve. So Curve has 6 single stock covered call ETFs. You see the list there: Amazon, Apple, Google, Microsoft, Netflix, and Tesla. But they also launched a new technology specific ETF called KQQQ, the Curve Technology Titan Select ETF. So is this an income ETF? There is some income in there, but is it more of a growth ETF? So I'm happy to say that I have a Q&A with Howard, the CEO of Curve, to talk about this new ETF, and we'll also discuss the single stock covered call ETFs, and we'll see how they stacked up against the Yield Max ETFs and get his opinion on that. So stay tuned for that Q&A. And again, thanks to Curve for sponsoring this video. So now let's go through the income landscape. As usual, we will do the S&P 500 ETFs first, then the NASDAQ, then the Russell, and then the rest. So S&P 500, of course, we're going to look at JEPI, not exactly the S&P 500. I know I always say this is stock picking inside the S&P 500. So still the king. They actually launched JEPI and JEPQ, by the way, in Canada. Fun fact for you, if you're American and you only watch that series, this series, not the Canadian one. But the latest distribution has been recently announced for October, and it's 39 cents. I'm actually surprised. There was a big jump from August to September, which is expected because August was a little bit more volatile, definitely a lot more volatile. You see a big jump. I thought it would go down, but hey, still at 39 cents here. So I believe that's an approximate 8% yield, something like that. JEPI's biggest, in my opinion, competitor in terms of, S&P 500, but stock picking within the S&P 500 is Bali from iShares. Same management fee, right? As soon as you see 35 basis points, you know that they're competing, doing really, really well as well. I mean, it's outperforming JEPI by a long shot. And monthly distribution, a little bit lower than last month here, but overall, very, pretty consistent distributions. There was a 1 month where it's 13, but fairly consistent. This is really kind of like a JEPI here, very similar strategy. There is the Invesco S&P 500. This is equal weight. This is not market cap weighted. This is very unique in that sense. If ever you're looking for more of an equal weight S&P 500, which in my opinion, I don't know why you would want that. I mean, long term, obviously market cap weighted is beating the equal weight. If you look at the indexes, S&P 500 Classic versus S&P 500 equal weight is underperforming. But hey, if ever you're interested in that, this could be a good one. There's 0% management fee till end of the year, and the management fee is really, really, really low anyway at 29 basis points. So this could be a good option. There is 1 or 2 distributions that have been declared. You're looking at a approximate yield of 9, something like that. So pretty, in the same range as a JEPI or a Bali. So there's that one as well. Now we're going to really the S&P 500 covered call or options based ETF. So we're going to start with the classic GPIX from Goldman Sachs, big competitor to JEPI. Very, very consistent distributions here. The latest one, if we look on the website, you could see here 33 cents again, just slightly higher than last month here. But you could see that GPIX, you're looking at approximately an 8% yield here. Very, very consistent distributions. Of course, then you have SPY, which is also the S&P 500, also very, very consistent distributions. A little bit higher than GPIX, right? Typically 12 in the 12% range, but that means you're giving up a little bit more upside than GPIX. Also, the fees a little bit higher, but this one also, I have to admit, has very impressive consistent distributions. A little bit lower than last month here, which is expected. Right, everyone, almost everyone raised their distributions for the August period, but we're back to about 51 cents here, which is in line with the rest of time here for SPY. It's been around for a long time, doing really well, about to hit 2 billion. And I recently had them on the channel, by the way, where we talk about their strategies in detail. Make sure to check out that video if you missed it. Then we have the lowest fee S&P 500 covered call ETF by iShares. This is a rinse and repeat strategy. You see the fees 25 basis points. Rinse and repeat, they'd sell 1% out of the money monthly options every single month. So you are giving up quite a bit of upside of the S&P 500, but that does translate to much higher premiums, right? Much higher distributions, which you could kind of see here, but they will vary greatly with this ETF. I would say it looks like it varies a lot more than Bali, for example, which they also manage. But this is a great ETF. In my opinion, I don't have XYLD here, but a fantastic replacement, in my opinion, for an XYLD. If you like a rinse and repeat, XYLD gives up all the upside for the maximum premium, but they reinvest 50% of the distribution for you or more if it's more than 1%. But IBVW looks like they give everything out. So I would always prefer this one, in my opinion. So this is a great rinse and repeat strategy where you see it here, right? S&P 500, 1% OTM, which means out of the money. So you're only capturing 1% upside of the S&P 500 every single month. So definitely for income investors here. Moving on to the daily option ETF. We're going to start with the first one that recently changed their name from JEPY to WDTE. And they also are about to start weekly distributions as well. So this is the S&P 500 Enhanced Options and Zero DTE Income ETF. So they changed their name a little bit. Massive distributions. This is by far, as well with their QQQY and the Russell one, you'll get the biggest distribution. So a little bit lower than last month, quite a bit lower, which is expected again because volatility has fallen. And this is a daily options one. And as you can see from the schedule, we're going to start having weekly distributions with the first one being declared tomorrow on the 9th of October. They also manage SPY-T so Defiance also manages this one, which is a little bit more ideal to live off of course, in my opinion, because it's also the S&P 500, but they have a target yield of 20% annually. So still very, very high yield, but very consistent distributions. They also use daily options. It's an ETF that literally holds IVV, and every day they do a daily call spread, which you actually could see here. And the rest is going to be in cash or government treasuries for the capital. So a very more consistent option, if you will, that captures a lot more growth of the S&P 500 and WDTE. But of course, you're going to get much less yield. With 20% is definitely no slouch. Then you have XDTE from Brownhill, the one that's outperforming everybody. This is a daily out of the money classic daily options here, just a daily covered call out of the money here, growing very rapidly at 166 million here. Their NASDAQ one's almost at 500 million. We'll check it out in a second. And in terms of their latest couple of distributions, well, they've obviously gone down also. You see that they were much higher last month because volatility was higher. So remember, guys, these distributions are going to be strongly based on volatility. The lower the volatility is, the lower the VIX is, the lower the distributions. And you will never expect consistent distributions with these ones. But remember, guys, always look at a total returns when you're trying to judge an ETF. Always, you got to look at everything. The total return is important. The consistency of the distributions, if you're living off of it, that might be more important, right, than someone looking just for total return. So you got to try to put all those factors together. And last but definitely not least, in the daily options one, this is the lowest fee daily options one from ProShares. It's iSpy. It's actually doing, the performance is really, really well. XDTE has a little edge on it, but iSpy is actually outperforming all the S&P 500 ETFs, I believe, that we've discussed in this video. The special thing about this one is the strategy is not that complicated. It's just, again, it's a daily out of the money covered call on the S&P 500. What really makes it unique is that it's the lowest management fee, right? So out of the daily options, when you're looking at 99 basis points here, 93 or 94 for this one, 95 for the round hill, 55. It's a big difference. So this could definitely add up over time, but this one, does not have consistent distributions. They will vary greatly based on volatility. You see that the latest one is a lot lower than the last month, which it's more in line with the normal distributions here, more normal volatility levels. But definitely one to consider, in my opinion, if you like daily options and you want a low fee, more of a classic or simple ETF managed by a big player. Moving on to the NASDAQ 100 players, everyone. Of course, there's QYLD, the original, the OG, and the latest distribution, as I expect, is going to be a bit higher. Well, don't forget, they don't give out all the distributions, right? So it was more or less the same, 18 cents. But if you look at the actual premium, you'll see that there's a massive increase. So they actually made 2.68% of premium or yield in 1 month, and they'll give you 1% of it out of it, right? And the rest, 1.68, is automatically reinvested in the fund. That is the only reason why QYLD can grow. It's because they reinvest a portion of the distribution. Moving on, we got JEPQ, which surprisingly, just like JEPI, very similar distribution. I'm already running out of breath. Like and subscribe. Thank you. 55 basis points here. Obviously going to have a bit higher yield than JEPI because it's the NASDAQ. So you're typically looking at about 12% here. And again, this one just launched in Canada as well with the same stock. And nobody's catching up to them. I mean, they're just JEPI and JEPQ, JP Morgan, man. 16 billion. I think JEPI's at 30 billion or something crazy like that. These are just the most trusted ones. But remember, this is not exactly the NASDAQ 100, guys. It's stock picking within the NASDAQ. And what exactly does that mean? Well, I feel it's even more defensive than buying the NASDAQ 100 directly. And speaking of NASDAQ 100 directly, GPIC, which I feel is JEPQ's probably biggest competition, and still doing well. Same management fee here as JEPQ and JEPI, and the latest distribution. Again, very consistent monthly distribution. I'm surprised. I thought maybe we'll see a little increase because of the volatility, but they didn't. So another super awesome basic one where you could live off of, in my opinion. Convenient to live off of, 10%. By the way, I do have a video coming up where I will go through the best ones on the U.S. to live off of. I recently published a video called The Great 8 for my Canadian investors, and there I talk about 8 funds that are ideal to buy and hold forever. They have common characteristics. A lot of you have put a comment, I want to see a U.S. version. I'll do a U.S. version with a little twist because there's so many in the U.S. compared to Canada, and more and more and more. I'm going to focus on the ones that, the great ones that you can hold and buy and hold forever to live off. Ideal to live off, which means pull all the income. So stay tuned for that video. Moving on, QQQI from NEOS. This one also a little bit lower distribution. Of course, we're going back to their normal 59.60 cent distribution. Doing really well in terms of In terms of returns, this one, you'll expect, my expectation is a very consistent 14, about 14%. Moving on here, of course, it messed it up, but let me just, there we go. Invesco QQQ Income Advantage ETF. So Invesco has their own. This is QQA. This is the stock symbol. So they're the creators of QQQ, manage QQQ. So what better ETF manager to do the recovered calls on QQQ? So this is basically the Nasdaq 100 with covered calls. Distributions, I think they came out with 2 of them. Very consistent so far. This is a newer ETF, and the distribution rate's about 10 to 12. So I would consider this a really good also basic option, where you just want the basic. I would put in the same camp, for example, as a GPIC. I think that it's very comparable to GPIC. What's special about this one, very, very low fee. 0 fee till end of the year, but then it's 0.29. So this seems to me like it's going to be the lowest fee Nasdaq 100 covered call ETF. It's even lower than JEPQ and GPIC. So we'll have to see in January, but definitely want to keep our eye on here if you're interested in more of a basic option for your Nasdaq 100 exposure. Classic covered calls on this one. I think they use equity linked notes, I believe, just like JEPQ does. And I think I have a video on the backlog to talk about the new Invesco covered call ETFs, because there's 2 in Canada and 2 in the US as well. They've entered the game. Now, moving on to the daily options one, of course, there's QQQY, the most extreme yield that you could ever get. And just like the S&P one, guys, it's going to weekly starting tomorrow, October 9th. So latest monthly distribution, much lower than the crazy one at the end of August for obvious reasons. I said it a million times by now, lower volatility. They have QQQT, which is SPY-T's Nasdaq 100 twin brother, twin sister, same strategy, right? Target of 20% yield. This would fall under the category of very ideal to live off of. 20% yield, very, very high yield as well. And, they just hold QQQ and write a daily call spread on the NDX. QDTE, obviously you guys know this is the one I own here. Distribution wise, a little bit lower than last week at 21 cents, but again, they're gonna vary greatly, and performance wise, this one is destroying everyone, including QQQ, by the way. Growing very rapidly, about to hit 500 million in AUM. You have IQQQ, which is iSpy's Nasdaq 100 brother or sister. What's cool about this one is if it's a Nasdaq, they didn't increase the fee. It's the same fee. The Russell 2000, by the way, is also 55 basis points. So this is, again, more of a basic daily option strategy, very similar to what Roundhill does, but for some reason they're underperforming Roundhill. Moving on to the Russell 2000, so small cap, if you're interested, it's a great way to get small cap exposure here. So you have IWMW, of course, these stock symbols just drive me crazy. IWMW, this is going to be the iShares Russell 2000 buy right ETF. So this is very similar strategy to IVVW, but instead of 1% out of the money, it's 2% out of the money. So this makes sense because Russell 2000 is much more volatile than the S&P 500, so they're able to write less covered calls, capture more upside, and distributions have been enormous. Let's see the latest one. Yeah, still enormous at 92 cents. So we're looking at very, very high yield here, but gotta expect big swings in the monthly distributions for this one. And this is the lowest fee Russell 2000 covered call ETF. NEOS has IWMI. And this yield is going to be similar, maybe slightly higher than QQQI probably over time. You see it's a little bit higher now. If you look at the latest distribution, slightly lower than last month, but higher than the original ones. So volatility, I guess, was still high in that portion of the month. But another cool thing, NEOS, by the way, is they all have 68 basis points. So typically, when you do Russell and NASDAQ 100, they typically have a bit higher fee sometimes than the S&P, but no, not NEOS. They decided to keep 68 MER for all of them. So another good one to consider for consistent income. Then moving on to the daily option covered call ones, you have IWMY, which is the extreme yield one from Defiance that does the daily options. Let's see the latest one here real quick. A little bit lower than last month. Again, this one as well is moving to weekly distributions. They didn't come out with IWMT yet. So they have SPY-T, QQQT, no news, and we don't know when that one's going to come out. Let's see, is it there? No, it's not there yet. So we'll stay tuned for that one. And I'm assuming it's also going to have a 20% target yield as well. RDTE is the Roundhill one. This is the newest edition, growing very rapidly, 43 million. I think it's not even a month it's out. Pretty crazy. Yeah, it is not even a month. It came out in September 10th, and it's October 10th in 2 days. Only 2 distributions have been declared. They're very high, 36 and 38 cents. So again, Russell 2000, higher volatility, higher distributions. You got the, and of course, last but definitely not least, the one from ProShares, a more, what I consider a basic daily option one. ITWO, first Russell 2000 ETF powered by daily covered call options. Did this come out before RDT? I guess it did. And I guess they could say that. But yeah, I guess they could say that. This one came out first, but it's not a daily call. It's a daily put. So that's why they were able to say the first daily call. Anyway, same expense ratio at 68. And your distributions, it doesn't look like they even declared a distribution, the first distribution. This is fairly new as well. And another one I'm going to add to the list, this is more of a global option or a multiple indexes. So, we covered the S&P, we covered the NASDAQ, we covered the Russell ones, which I feel is really all you need for U.S. equity. Of course, you mix and choose which ones you want for your exposure. But GIAX, the Nicholas Global Equity and Income ETF, kind of does a very unique strategy where it does say they're selling a daily spread. Here, selling daily index credit spreads on U.S. indexes. So it looks like they could use daily options on this one as well. So this is a similar strategy what SPY-T and QQQT does. Expense ratio is a little bit higher, but the unique thing about this one, just like the name says, global, is that they have multiple indexes. So they have, here's the Vanguard FTSE developed ETF, which is international developed exposure outside of North America. Or maybe it includes Canada, I'm not sure. So and then of course you have the Russell 2000, the S&P 500, the NASDAQ 100, QQQ. You have other little things here, which is interesting. Even the Vanguard Dividend Appreciation ETF, which I believe is VIG, I think. So a nice mix, more global exposure here. So if ever you don't want to pick S&P or NASDAQ, you want something more global, this could be a good option. So definitely going to follow up and keep track of this one. The distribution rates have been enormous at 40 cents for 2 months here. Again, this is fairly new. There's only been 2 distributions declared. So at 40 cents, guys, on a approximately 1963 stock price, let's just do times 12. That's 4.8 annually divided by 1963. Crazy yield of about 24%. So this is definitely interesting. We'll keep our eye on this one and see what happens. Last but not least, let's go into the alternative, what I put under the alternative umbrella, niche, sector specific, crypto, fixed income, closed-end funds, everything else, right? So I did do a video recently on SVOL trying to explain the distribution, which was recently reduced from 30 cents here to 28 cents. I think it could be a trend that'll continue. It's possible they reduce it even more if Feds cut the interest rate even more, because this ETF is, in terms of the capital that they hold to do the VIX short strategy, they started putting more and more, instead of, they still have primarily short-term U.S. government bonds, which when the Fed reduces the interest rate, SVOL is going to take in less income because short-term government bonds pay out less income if the interest rates are lower. So that's why they had to reduce their distribution. Also, volatility has been fairly low as well. So if volatility is low, the premiums are low if you're doing a VIX short strategy. And then remember that all of these ETFs here, these are all fixed income style ETFs as well. But I still feel like SVOL is probably in this category, the alternative or fixed income, whatever you want to call it, the best. It's still the best. Phenomenal yield, still a 15%, guys. No slouch whatsoever. Phenomenal total return since inception. You could see that here, more or less in line with the S&P 500. So this is still a phenomenal ETF to buy and hold forever, to live off of, to pull out all the income. I think you'll be okay. It's still really, really good. And I think it's a good complement to your S&P, NASDAQ, Russell, or whatever. It's a nice little complement to your equity. This could count pretty much as a fixed income style ETF, if you ask me. There's, of course, Yield Max, right? The popular yet very controversial Yield Max. We know that YMAX, the all-in-one, and YMAG have gone to weekly distributions. They've recently updated their strategy to be able to include call spreads. This is going to be good, which means the ETFs could capture more upside. And they also recently launched a couple of new ones, including Palantir in here. So there's Yield Max, of course, which we can't ignore. There's Curve, of course, which I talked about in the beginning. There's FEPI and AIPI, very consistent if you want to invest in technology stocks, the classic technology stocks. You have FEPI, which consistently has a 25% annual yield, no leverage, pretty good management fee as well at 65 basis points. So if you're if you're an income investor and you want to invest in something very concentrated in technology, there's the NASDAQ 100, but that's 50%, 55% technology. This is 100%. FEPI is a good option. You got the biggest classic, tech companies. AIPI takes it a step further and focuses on more the AI companies. So a little bit, there's still some classic tech stocks in here, right? Like AMD, Nvidia, and Meta, and Intel, but there's more things geared towards AI with like ARM and Palantir, CrowdStrike, some things that I don't even know what they are, like Arista Networks, et cetera, et cetera. So, obviously stocks with a little bit more risk, but a little bit more volatility. And that's why the yield on this one's about in the 34-35% range. So this is a good one if you really want to invest in AI stocks as an income investor. You don't want to pick and choose your stocks and you want covered calls. This is a fantastic option. Crane shares, Clip, which KWEB has exploded lately because China has declared a stimulus, but Clip has gone almost nowhere. I got a few messages for this, but of course it won't because they're writing at the money calls, guys, on KWEB, which means you're not capturing any upside of KWEB. Crypto now, you have YBTC, which just declared an enormous distribution lately at $2.11. So very high yield on this one. Same fee as the QDT, XDT, etc. They write covered calls on BITO, by the way. They recently came out with the Ethereum one where they write covered calls on where is it? ETHH. The ProShares, Ethereum, BITO's Ethereum brother or sister. I think it's YE, whatever. Like and subscribe. And their first distribution, here it is, EETH. There we go. First distribution is absolutely ginormous. I don't know if it's because maybe it includes a month and a half worth, but it's absolutely massive. It's like 95% yield. I'm sure it's going to be much lower next month. But hey, if you want to get into Ethereum with covered calls, you got an option for that too. Maxi simplifies Bitcoin strategy ETF, so they invest in Bitcoin futures just like Bitto does, but they do call spreads to generate a little bit more income. This is the one I used to have in my portfolio. I actually sold it recently. You'll find out what it is in the next portfolio unveil. Can you take a guess? Let me know what your guess is. Of course, if you're a PII Inner Circle member, you'll already know because my live moves are disclosed every single day. If you're interested, just hit the join button. But this one, the distributions recently have been $1 a month, so instead of 15 cents. So I think that's going to continue at the until the end of the year, because I think if you look at the past, in 2023, they did a massive $4 dividend. Remember, this is an ETF, so they got to pay all their capital gains or whatnot by end of the year. So I think they're just spreading it out, and maybe it'll be $1 till end of the year. We'll see what happens. Moving on to fixed income, my least favorite category of all time. Some fixed income options would be AGGH, which is included already in SVOL. Of course, you have TLTW for TLT with covered calls. Volatility seems to be going lower and lower. You see that with the distributions have been pretty dismal. Even the performance has not been that great for this one. It just follows what TLT does, but with covered calls. LQDW focuses on investment grade corporate bonds. It's LQD with covered calls. And HYGW, probably the best performing one by far. It's actually, in the sixes here, does covered calls on HYG, which is just regular high yield corporate bonds, aka junk bonds. Moving on, and again, guys, look, if you like fixed income, my opinion, I strongly suggest go with SVOL. Go with SVOL. You'll have top-notch, much better performance, and SVOL includes a crap load or mostly fixed income now anyways, right? National municipal bonds, intermediate corporate bonds, mortgages, high yield corporate bonds, BUCK, which is cash alternative, mostly short-term government bonds, AGGH, which is a collection of bonds. So why I don't know why people would bother with these, but hey, that's, you do what you want. All I could say is I would just go with SVOL. And last but definitely not least, closed-end funds. You guys know I'm less of a fan of those now. With so many ETF options, you might as well go with them. But some top all-in-one closed-end fund options, the best one by far that nobody could beat is the CEFS ETF, the SABA ETF. So this is an all-in-one closed-end fund solution. It's an ETF that invests in a bunch of closed-end funds. The returns are absolutely phenomenal. Look at this one-year return. Pretty insane. It's destroying everybody in terms of closed-end fund performance, guys. My number one piece of advice, if you want to invest in closed-end funds like Steve Bavaria is very likes a lot, just go with CEFS, an all-in-one. The yield's not too crazy at 7.62, but these guys know what they're talking about. They also have a all-in-one closed-end fund option, which is like CEFS, but it's actually a closed-end fund itself. It's SABA, that's the stock symbol. Performance not as good as CEFS, but it's trading right now at a 9% discount, which could be interesting. There's also River North, which I used to own as well. I sold that as well. You'll find out next month what I swapped it into. No longer trading at a discount, however. And you also have YYY, which is a collection of about 60 closed-end funds from Amplify, the same guys who manage Devo. So I'm out of breath. That's it for the overall US landscape, everyone. We're going to do this again next month as well. So I hope this was a good summary for you. Again, I'm going to focus more on the diversified index-based funds, which I feel are really all you need as an US income investor. But, I'm just getting more and more out of breath because there's more and more new funds. But this is your number one source for income investing. I will always keep you up to date on the income landscape. So thanks for your support. and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.